Hey everybody, Chris here. So are we seeing the calm before the storm for Dogecoin? We're going to explore that in this video. Please be sure to subscribe to my channel. Hit that little notification bell too. You can be notified when my new videos come out, as well as when I do live stream. And it's in the summertime right now. Yes, we're in June. Things quiet down. We've been talking about how post Bitcoin halving, we were going to see a dip in the market. We've had it, but it's still dipping. And why is that still happening as well? But we know eventually this thing is going to turn around, and that's going to be the big storm. It's going to be a good thing, not a bad thing. The bears and the bulls right now are kind of taking it easy. They're kind of quiet right now because volume is down, interest is down. Everybody's out enjoying the summer, doing things like that instead of concentrating on the markets. We see this every summer. We're here again now, but we have good things coming. So let me show you the charts in the news. I'll show you what I'm looking at. So here's the Dogecoin chart as I'm recording this right around 12.44. We're at 12.44. Came up just above 12.5 cents this morning, but it couldn't hold. But if we zoom out to the 2-hour chart, here's what we see. Flatline. That's right, flatlined over the past few days. Just up and down, right around between 12.4, 12.5. That's where we are. And we compare that to Bitcoin. Bitcoin actually has dropped more over the past couple days. So that means that the Doge BTC trading pair is actually up a little bit. But look at the volume and look what happens on the weekends. The volume of Bitcoin trading just drops off a cliff there. So here's where we are in the middle of the weekend, is looking at just straight sideways and straight sideways. That's what we've got right now. So not expecting much price movement. But what's been happening with Bitcoin? Why did we see the drop again? Yes, on Friday, we had another outflow day, over $100 million of outflows on the Bitcoin spot ETFs. That is 6 days in a row, guys. What are these ETF holders doing? They're selling. They just continue to sell. Are they waiting to buy in at a lower price? They think Bitcoin's going to go lower? Or did they just try out the ETFs and now they're kind of like, I'm just going to take my profit and go on to something else? Hard to say, but that's part of it. The other is miners, right? The Bitcoin miner reserves is dropping down over the past couple weeks. It has been dropping down. Bitcoin miners have sold over 30,000 Bitcoin, around $2 billion worth since June started, the fastest pace in over a year. The recent halving has tightened margins, prompting the sell-off. That's right. The Bitcoin miners need to pay their bills, their utility bills, if they want to keep mining and look for profits in the future. So they've got to sell some of their Bitcoin. So this is the reserves for the Bitcoin companies, because they need to make public how much Bitcoin they own. And they're selling right now. So what does this mean in terms of the miner reserves? Well, one of the reasons is the hash rate. The hash rate has actually been going up all through 2023, and it just peaked here right around May 26th at 657. 657 terahashes right there. And with that means it's more expensive to mine, right? I asked Google the question. It's like, hash rate measurement. Bitcoin's hash rate measures how many guesses are submitted per second to the entire blockchain. A higher hash rate indicates the need for more computing power, increased energy costs, and longer verification and transaction times. This results in slower, but more importantly, more expensive Bitcoin mining. That's right. More expensive mining as the hash rate is up high. So what ends up happening is you're going to see a drop off because some miners, they're just going to cut their production. They're going to turn off a bunch of computers. This actually also happens many times during the summer because there are higher energy costs in the summer, particularly in the United States. Like a state like Texas, which is really hot, it's more expensive to cool those mining rigs. And in many places, the cost of electricity is more in the summertime as well because there's more competition for the electricity in the grid. So this is what we were probably seeing is a lot of computers, mining rigs being turned off now because the cost to mine a Bitcoin is so high. So that's what we've got. We've got the selling of Bitcoin from the miners. We've got the selling of Bitcoin in the spot ETFs. That is what is keeping the market down. We need to see these things turn around before the overall crypto market is going to go back up. What does that mean for Doge? Well, here we have calm before the storm, right? And what is this storm going to look like? Well, while some major meme coins have shown a little strength in the past hours, Doge remains calm as it waits for the next moves. Is it going to be more of a dip? Are we still bearish on the micro level? Right now, I think it's just kind of flat and sideways. Doge did post a substantial loss in the past weeks, continuing its bearish movement since 17 cents in May. Again, it's been following Bitcoin. As Bitcoin has been going down, Doge has been going down as well. Amid this month's decline in the global market, volume is yet to flow back into Dogecoin. So compared to the high reductions amongst other top meme coins, because we did see as Bitcoin was going down, memes were actually going down at a higher rate. But Doge's drops appeared more moderate this week due to low selling pressure in Doge's market. Price has stalled at around 12.4 cents for the past 3 days, and we see that it's all flattened out, right? The trend is still positioned in a downward range on the daily graph as it trades close to the yearly low. So again, as I said on the live stream the other day, is like the Doge chart does not look very good. It needs to turn around, and maybe some of this sideways trading that we could see here coming forward could lead to a retrace back up, and we would be looking for that move to break that downward trend. So one of the things that Astro's looking at, just a reminder, and we looked at this before, is on the weekly chart. Yeah, this is the Dogecoin weekly chart. So it goes back to 2021, and we see this high, and this is on a logarithmic scale, so it's based on percentages here. We do have this coming golden cross on the weekly. That's right. In white is the 200-week moving average. In yellow is the 50-week moving average. But because Doge's price is coming down, the increase in the 50-week moving average has slowed down as well, which is just going to extend this golden cross out a bit further, probably now more toward the end of the summer. And we were looking at that, of course, on our chart as well, which we have right here. I have this 50-week moving average in blue here, and it has slowed down in trying to catch the white. So this means that this is just going to extend out through the summer, I think. But 4 weekly red candles in a row, not great for Doge. Again, if this can just flatten out for next week, right around 12.5 cents, and eventually move back up, that will be a good sign for recovery for Dogecoin. Why traders need to look out for this breakout? What are the next steps? Well, there's going to be some key factors going on here. Doge's recent decline below the 13-cent resistance finally provoked a breakout from its classic descending triangle pattern. So that breakout actually just went sideways. So by going sideways, it's no longer following that straight trend down, at least on the daily chart. The weekly still doesn't look great, but the daily chart, not as bad. Funding rate turned negative, mid-bearish pressure, and we're just going to have to see how this goes, but there's the funding rate turning negative there on that chart into the red. So we have to see this turn around, and it's just going to be, eventually, it's going to turn around with the buying. So that's all we're looking for is the buying. And what is going to do that? Well, whale activity, yes. We do have whale activity spiking a bit. We've been talking about whales continuing to accumulate Doge at these low prices, knowing that this whole thing is going to turn around. The whole thing is going to turn around. One of the things that I'm looking at is the RSI here. So the RSI it was at 28. Now they say it's at about 33. It's come up a little bit. The last time it was this low, though, was way back in earlier, more toward the beginning of the year. And Dogecoin's price then was like 7.5 cents. So now we are at a similar low RSI, but the price isn't 7.5 cents. The price is 12.5 cents. So this means that it looks like, according to the RSI, we are bottoming out. We are in this oversold position, and Dogecoin buying will turn this around. So that is the storm that's going to happen. But right now we are in the calm, flattened out trading over the past 4 days, and this is probably most likely going to continue through the weekend as well, and we'll see what sort of things happen on Monday. Once all this trading starts up again, the week starts up. Last Monday wasn't so good. We saw a big dip. Hopefully this Monday we can see more of a recovery happen. Let me know in the comments below, what do you think about this calm before the storm? I know this low volume is just kind of boring right now, but we got to get through this. Give the video a like. If you haven't already, please subscribe to my channel. I appreciate the support. We'll see you next time.